Hey traders, and welcome back to another video. So today I want to discuss what occurred in the afternoon and how we can utilize the lunch range for successful PM trading, how we can utilize key inefficiencies for more insight, more precision, protected highs, protected lows, and engineered liquidity, and of course, anything else mentioned in this video. So whenever we're trading the PM session, and this really goes for any session for that matter, I'm always asking myself, what did the previous session or sessions do for us? What can I gauge from those sessions? And the main thing from that is really, where's the clearest liquidity from those sessions? So session highs and session lows. Okay. Now, not only identifying, in this case, lunch low and lunch high, and AM session low and AM session high way above, I want to ask myself, what are those session highs and lows falling short of or in close proximity to? If anything, that just increases the likelihood of price getting to one of these session lows or session highs. Okay, because trading, we know, is just a game of probabilities. Okay, so when we look at the morning here, I really just want to paint this picture. I'm sure you guys already saw this. We had a strong open and then an extreme turning point, selling off aggressively, just every retracement got pushed down, retracement pushed down, et cetera, right? All that to say, the trend for today's session is what? Clearly bearish. Okay, now, have we swept a lot of sell-side liquidity? Yeah, we swept some here. We swept the opening range low, London low. We delivered down to right here. These two lines is the new day opening gap, internal sell side here. Okay, so when can we logically and responsibly take short setups if we've already moved substantially, opposed to when is it time to take a reversal? And there's many ways to go about this, but if you get confused in those ways, the main priority, at least for me, is just, okay, where is low of day? Is it close to anything that would support the idea of us getting back down there? And if we look at this low of day here, okay, that, of course, as time progresses, and we hit the 12 p.m. Eastern time or noon hour, that becomes AM session low, so a session low, right? Now, look at what is right below that AM session low, okay? So 23.43825, that's the AM session low. Previous day low right here, 23.435 or 436, 75. Okay, so the low of the AM session is clearly engineering liquidity. So how do I use this information? Well, I would really be cautious. And yes, did we push up? Yeah, that's fine. I don't need to catch every move. Yeah, we pushed up here again. But again, thinking in terms of probabilities, if I wanted to take a high probability long setup, even just picturing it in my head without looking at charts, would I want the low of an extremely bearish morning to fall, a point or two short of another daily low? Of course not, right? So when I see that occurring, this tells me, okay, if I see order flow support bearish continuation, this is what I'm going to be looking for, okay? And this is exactly what we see. So does that mean every single green candle upwards, I'm trying to call the top, or every single fluctuation down real quick, I'm assuming it's going to go lower? No, of course not, right? I'm waiting for the clearest setup in that direction, okay? So not only is the AM session low falling short of the previous day low, but stacking confluence there, we can really utilize the lunch range. And I utilize 12 p.m. to 1:30 p.m. Eastern time for my lunch session time window, and use that session low and session high and find our dealing range and use our dealing range how we know how to utilize it, okay? And we'll dig into that here, okay? So we discussed the session lows, how that is a likely draw, but why is this session high, lunch high, a less likely draw on liquidity, a buy-side draw on liquidity? Or in other words, why is it more likely that we're going to be bearish and not bullish, right? Well, all the session lows are falling short of one another, clearly engineering liquidity and some internal sell side here, right, as well. The top of the lunch range, we have an SMT, which is what? A bearish algorithmic signature, a very strong signature, okay? On top of this, after this SMT occurs, what happens? We close right back below what? Look on the right side here. the new day opening gap. And also note right here, the 130 fair value gap, which of course is just the first presentation fair value gap after 1:30 p.m. session open, Eastern time, of course. And whenever I see key areas, in this case, a first presentation fair value gap with a new day opening gap overlapping with one another, or this could be, the 9:30 and 1:30 fair value gap overlapping, or the new day opening gap and a previous new week opening gap overlapping, etc., etc. It really calls my attention as a rejection point, okay? And especially, where are these two significant inefficiencies residing within? Premium, look at my cursor here, premium of the lunch range. So this dealing range is anchored to lunch high and lunch low, okay? So see how we're going up, delivering to a premium, but more precisely, key inefficiencies, okay? So all these levels that we're talking about here, lunch high, lunch low, AM session low, AM session high, all session highs and lows, as well as the new day opening gap, the first presentation fair value gap, so the 9:30 fair value gap, the 1:30 fair value gap, the midnight fair value gap, which of course is the first fair value gap after midnight open, after 12 a.m. Eastern time. These are all plotted with the indicator for you on a daily basis. So it takes away the tedious process of preparing for a trading session and really having to scrub all the way back every morning, which is what I used to do, and go chart these things on their own, right? The midnight, the 9:30, the 1:30 as we progress, previous new day opening gaps. You need to have a bunch of different templates, et cetera, where the indicator really just plots that for you. And as you see here, once you hover over these levels, it shows you those price levels precisely. Okay, AM low here, lunch low, etc. So it's super, super useful, as well as, of course, it plots the macro windows and the 130 fair value gap right here. Okay, and even it's not going to be a factor in this case, but if you wanted to put on previous new day opening gaps, you just toggle on, the last 5, and it shows you those with dates. Okay, if you don't want it on at all, you just untoggle it, and it will disappear for you. Okay, in this case, with today's delivery, today's fractal of price, I want to look at this new day opening gap from today's session, okay, and see how price came right up into this and rejected. Okay, now, again, once we get back below this new day opening gap right here and also form this 130 fair value gap, I mentioned this is a significant area for us to monitor for rejection. Think of it just as a wall, right? If we are going to deliver down to lunch low and AM session low, previous day low, we really shouldn't spend a lot of time above here. And if we do, like we did here actually beautifully, retrace to this level, we shouldn't really spend a whole lot of time here and consolidate, because as long as that occurs, it's just continued to be unfavorable session, and also just increasing the likelihood that we may actually want to get back up here. Okay, but on top of just this being a wall, look above that. There's really nothing else for us to do. There's no fair value gaps. There's no prominent relative equal highs or equal highs up here. The only clear large wick here is what? Lunch high, which is an SMT. And we want that bearish SMT to hold. Okay. Now, we obviously see this rejection right here, how price comes up into the 130 fair value gap and the new day opening gap. And really precisely, if we go on the new day opening gap, this is another cool feature of the indicator. You can toggle the midline on or the quarters, but whenever we have a smaller new day opening gap or new week opening gap, I'll typically just utilize CE or 50% of the new day opening gap, and you can see that it's dragged out there. And we're just wicking right above that 50% level, but you get more precision with this, okay? So see how we're rejecting off of there? Right out of this first presentation fair value gap, right out of this new day opening gap. I want to bring your attention to here, and this is what I'll really refer to often. You guys might have heard me talk about this before as bias footprints. Okay. And what do I mean by this? On top of all of the narrative we've already laid out, okay, look at what price is doing right here. Okay. So I'm going to hover over both of these 1 minute candles. They're equal. And I want you to look up here. Okay. So look up there at the values up top. The high of this candle is 23,502.5. Okay. Now, the low of the 130 fair value gap is 23,503. So this is falling half a point short of a key inefficiency. Now, this is an extremely useful gem I'm going to share here. If we see a high here, equal highs, relative equal highs, a prominent swing high falling just short of a key inefficiency, in this case, it could be the 130 fair value gap, also the new day opening gap. It could be just short of midnight opening price, just short of 9:30 opening price, just short of a new week opening gap, etc. All the key inefficiencies that we utilize, it's pretty likely that we're going to draw back up here. Okay. Now, again, recall what we've already laid out for narrative being bearish. Okay. On top of this being a likely draw, this is also an extremely likely area that will just sweep this in reverse, because we already laid out there should be nothing else for us to do up here. So the only reason we would go back up to a premium would be to run this high, right? And that's exactly what we do. Okay. Now, with bias footprints as well, what are we doing on this move upwards? Okay. We have really, we'll call it 2 points on both sides of sell side and buy side here. Point A, point B of sell side, point A, point B of buy side. Okay. If we are looking for shorts, if we're looking for a continuation to sell side liquidity, sell side program or sell program, to continue, would I want to see them leave this sell side or purge that sell side? I'd want to see them leave it while the manipulation occurs, right? So they're leaving the sell side of the range internally and they're purging the buy side of the range. So again, we reject off these key inefficiencies, the 130 fair value gap and the new day opening gap. And then we're just waiting for confirmation that we are in fact reversing out of this key area. Okay. And that is these two consecutive BISIs here. And we have the SIBI passing right through here. Okay. Which is a balanced price range. Okay. And you'll see this beautiful move upwards, sweep into key inefficiencies, BPR. Okay. Now, going into the macro windows, and for those of you who are returning listeners, you guys know how I utilize macros for the most part. You guys know I love the macros. Time is the most beneficial, the most valuable aspects that ICT has given the community. We really need to dig into this, and I have plenty of videos on this, but with macro power of 3, right? Typically in a short setup, I want to see clear manipulation upwards and then the BPR. But if we look at this fractal of price, right, we've already delivered and swept this high. This is a balanced price range. This SIBI is filled out, okay? Then, and actually it's filled out right at the start of the 250 macro, but there's really nothing else while we're in this macro window for us to do, okay? And on top of this, when this is so clear with that same logic that we've already swept this high, there's nothing else for us to do up here, we have clear engineered sell side, lunch low, AM low, previous day low, etc., everything we've been discussing. These are times when I will enter ahead of a macro window with the anticipation that it's going to be a spooling macro. Okay, so with this trade here, I was positioned before on this candle's close. That being said, once we did get this initial little push down, I'm not going to jam my stop loss to break even there at the bottom of the BPR. It would have been fine in this case, but plenty times when we have our entry confirmation array, in this case the BPR, plenty of times it will get a little displacement, and then that's exactly what the macro will refer to prior to rejecting and continuing the move lower. So I don't want to jam that too tight there. I want to allow for that retracement. But there should be no reason for price to need to come all the way back up here to this high, rejecting from these key inefficiencies that we pointed out. Okay. Now, again, with spooling macro, the main thing is that I'm not requiring, as I mentioned, super clear and prominent manipulation to the upside prior to reversing. I also would like to see it deliver a little more rapidly than this, if I'm being completely honest. It's not going to be perfect, just like everything else in trading, but it's okay to do this. And as we can see, it still took a little longer than anticipated, and then ultimately did get there as we progressed closer to 3:30, closer to that 4 p.m. close. And then also, I don't want to put too much on the chart. If we really just look at these BISIs over here, okay, I'm going to switch my crosshair now. this is also another reason why we can at least expect continuation lower with this key PD right here. If we have these 2 consecutive BISIs that I've just labeled, they were first utilized to do what? Push price higher and sweep liquidity. So initial state of delivery was bullish, close below, change in state of delivery, continuation, and confirm, further confirmation is what I'm trying to say here, that we're in a sell program. And also, you guys who have been around for a while, this is what I constitute as one form of a high probability bearish inversion, okay? Push us higher. Once we close below, it should reject price lower until we meet sell side objectives. And again, that's exactly what we do here, 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 okay? So again, ask yourself what the previous range did, the previous session did, or sessions, plural, did for you whenever you're entering into the trading session that you trade. And you really want to use these session highs and session lows. And again, this is the indicator. It's all plotted for you. The new day opening gap, first presentation fair value gaps, key opening prices. I have these taken off now just for clarity because I have a ton of stuff on the chart. The midnight fair value gap. Now SMTs have just been released as well. So macro SMTs are added, which is absolutely enormous. And if you guys use code SMT right now for the indicator, that'll get you a 20% discount on all plans. But as usual, I hope you guys enjoyed this video. If you have any questions with anything discussed here or with the indicator or whatever transpired today or this week thus far in the market, feel free to comment below or come join the free Discord and give me a ping there. So hope you guys enjoyed and talk with everybody soon.